So you see tons of startups now. There's this tech event we were at in April, the Africa Tech Summit, and it was hundreds of companies, and half of them were involved in crypto in some way. And that was before stablecoin summer. So that was like the precursor, kind of see the trends happening in Africa that later hit the rest of the world. And everybody was there, and it was just wild to see.
Hi everyone, welcome to Unchained, your no-hype resource for all things crypto. I'm your host, Laura Shin. Every episode of Unchained, I read comments from listeners. Today we have a comment from Emily Jr. responding to my recent interview with Jesse Pollock about JP Morgan's announcement of a USD token launch on Base. On X, MLE Jr. said, JPM on Base, Stripe on Base, Privy acquired by Stripe, largest bank in the United States, JPM, largest private fintech on planet, Stripe. Gradually, then all at once, accelerating. If you want your comment or thoughts on the podcast featured, write a review of the show overall, or leave a comment on our video on YouTube, Farcaster, or X. This is the June 24th, 2025 episode of Unchained. Crypto moves fast. It's why Bitwise launched the weekly CIO Memo, a jargon-free summary of what's moving crypto markets, written by one of the best in the business, CIO Matt Hogan. Get up to speed in 5 minutes or less. Check it out at bitwiseinvestments.com/CIO memo. Carefully consider the extreme risks associated with crypto before investing. In many countries, governments freeze accounts, surveil transactions, and seize assets, not just from activists, but from everyday people. That's why the Human Rights Foundation created the Financial Freedom Report. Sign up to receive it weekly at financialfreedomreport.org. One early Bitcoiner sold 30,000 BTC too soon, missing out on over $1 billion. Don't want to make the same mistake? With Xapo Bank, eligible members can get instant cash without selling their Bitcoin. Check out zapobank.com/unchained for more. Today's guest is Elizabeth Rossiello, CEO and founder of AZA Finance. Welcome, Elizabeth.
Thanks for having me back.
I know, you were the first guest ever on Unchained 9 years ago. I can't believe not long to have you back. But the timing is so fortuitous. You've just announced that pending regulatory approval, your company will be acquired by Uruguayan payments provider dLocal, plus Stablecoin summer. And we're also in this moment where fintech and crypto are kind of like all competing in the same space. So this is like the perfect time to have you back.
So wild. Feels like a different planet than when we first talked, right?
I know, seriously. I listened to the first episode, and it's so funny because you talked about how at that time people, like when you started, that people would make international payments by sending somebody to, like, let's say they wanted to make a payment to China. They would literally send a person with bags of cash to China.
Yeah, no. And like when Barry Silbert sent me his first investment, he had to send me a check because there was no wire to go through. And then I get a DHL check called the Bitcoin Opportunity Court. And my bank then sent it back to the US from Kenya to verify it. And I was like, this is madness. like so wild, so wild.
Yeah. I mean, so just paint a picture a little bit more for us of like what the African payment system was like or landscape was like back then. And then we can kind of go through all the changes, because I almost feel like in a way you've been through everything that like the US is like kind of starting to go through now, which is sort of fascinating. But yeah, go ahead and start with what the beginning was like.
Yeah, thanks for that. I mean, we always joke in the Africa fintech space that people outside the space say Africa leapfrogs everything else. Like we hate that word, or it says like, you never had traditional infrastructure there. It was just a blank canvas. And then in comes technology. We're like, I don't know if that's true, So I don't know how many investors or journalists have used those terms. But when I moved to Nairobi, Kenya in 2009, it was 2 years into M-Pesa, which was the telecom innovation that really kicked off. There have been lots of telecom innovations, but that mobile money of M-Pesa just changed the world. And it took off so successfully in Kenya for a variety of reasons, including government support, a lack of competition, perfect timing in terms of the Kenya tiger economic growth story that was happening at the time, the growth of the middle class. So many things were happening to make this just M-Pesa time season. And I arrived just as that was kicking off. And there was a ton of research from around the world, development agencies, private companies, investors, everybody was like eyes on Kenya watching that work. And still 15, 20 years later, you go to any digital conference on Africa and they're like, the first thing they say is, did you know about M-Pesa? It was just a really once in a lifetime opportunity. And there was an iHub, like a tech hub, downtown Nairobi, in Kilimani, and Google was a sponsor of it. And it was like the first little Silicon Savannah situation, right? And it was like 20 people, 30 people. It was very small. There was a coffee shop. If you went there, you saw the same people every day. There was a couple of cool little code academies. There was like Akira chicks and some Ruby guys, Ruby and Rails guys were down there. It was like very, very early. And we had a Bitcoin meetup. And it was like me, my co-founder Charlene, and like 5 people, like Pele Brandegard, who, is on as a yeah, I think you might have been a vest here. He was an OG, and then a bunch of like crazy guys. And it was just a smorgasbord of a dozen total OGs. And we started from that. And somehow when we started the company and I reached out to Barry Silbert's brother on LinkedIn and he started investing and a friend wrote a piece in Bloomberg and they started investing and we started BitPesa, which was the first Bitcoin exchange to trade crypto in Africa, the first Bitcoin exchange in the world to connect directly to mobile money, and the first, as far as we know, crypto exchange run by females, me and Charlene, and later Amy. So it was really just like the absolute first. And Barry Silbert finds out about us. He's like, come pitch to me in New York. He sends us money. A little bit later, the Pantera guys find out about us. Blockchain Capital finds out about us. And most importantly, Joe Bashiro, who then went on to become the cabinet minister, and at that time was the head of Google Kenya, finds out. And they invest. This is like November 2013.
And wait, and I'm sorry, so you said that you arrived in Kenya in 2009 and you were doing, I think, like microfinance at that time.
Yeah,
And then,
yeah.
so what year was it that you found out about Bitcoin?
2013. So for
Okay,
5 years, I was working in microfinance. And what does that mean? That was like the first version of fintech. It was using mobile money to deliver banking services, most of it. And sometimes it was very manual, like in Ethiopia, they would literally use manual calculations for hundreds of thousand client branches.
Wow.
And in some places like Ghana or Tanzania or Uganda, they were like very much using MTN's mobile money or Safaricom's M-Pesa. And my co-founder Charlene had also been working in this space with like asset financing for a lot of water irrigation and things like that. And we were just like working in the field, going to the middle of nowhere, meeting with like fisherwomen and agricultural and livestock, sitting in all sorts of houses in Botswana, in Malawi, and Ghana, learning about how this technology was revolutionizing the way to bank the unbanked. And so I've been really working in the field for 5 years doing that, writing a lot of research, talking about how a lot of these programs were working and they were efficient and the metrics were there, but the source of capital, because they were lending, right? Microfinance is just on lending, was coming from global donors who were lending in hard currency. And how do you take a loan in another currency than the one you're operating in? And I always say, like, if the shilling is sliding against the dollar, how the heck are you going to pay it back? And this became a topic that I was writing a lot about in my reports and I was talking about. And I was focusing a lot on that. And when I was introduced to Bitcoin in October 2013, I was thinking this would be a way to create kind of liquidity between currencies. And maybe we didn't need to always go to hard currencies to lend and to finance local financial institutions. Maybe we could start to trade directly in shilling. Maybe we could use Bitcoin as a way to trade between shilling and Naira or shilling and South African Rand. And maybe we could use it as a way to make doing business across border easier. Because a lot of the companies I worked with would be working not just in Kenya, but also in Uganda and Tanzania and Nigeria and Ghana. And there was no way to make payments across Africa. And it was so amazingly sexy and fast to make a payment in Kenya with M-Pesa. I think because we could touch Lightning and we were like, mobile money is so good. I never took my wallet anywhere. I could buy anything with mobile money. I could pay for a school fee, a plane ticket, a single tomato, And when my parents or my family would come from New York, they'd be like taking out their wallet. I'm like, put your wallet away. I already paid, We were living in the future. And so to go back in time to do an international payment seemed bizarre. Why wasn't anybody figuring this out? And then layering it on top of where are the local currency markets and trading and all those things kind of coming together give us the idea for the company. And, I think once I started connecting with the US VC guys who were starting to get into Bitcoin blockchain, they were like, let's invite this lady to Necker Island. And that's where I met you. And I'm like, talk to my board. And I'm like, guys, I'm, working mom with a startup. I'm like 31, living in like suburban Nairobi, and they want me to go to the Caribbean. And I had to ask special permission to get over there. And when I got over there, I met all these like Silicon Valley people and other people creating exchanges around the world. And they were like, yeah, you're not alone. We're actually doing this kind of work in all these different regions. And that really opened up my eyes to the global community. And it was very welcoming to me in a way that the regular venture community was not. And I found that pretty cool. I found like the personalities in the early days of crypto were very inclusive, and everybody was excited to work in an emerging market, which is not the case when you were dealing with venture investors at the time working in other space. So that's how I met you. And then you pitched me on this during this experience and we did the first podcast.
And so, as you mentioned, initially you were using Bitcoin to connect. So basically, you're using Bitcoin as sort of like the middle technology to help people who were, like in Canada or whatever, make a payment to Kenya or something like that and do
Exactly.
it much more cheaply because the rails were like kind of expensive.
And
So
fast.
yeah. So explain kind of like how that evolved over time, because obviously I'm sure now it's like more like stablecoins. And I noticed you have all these other fintech options as well. So yeah, just tell us kind of the evolution of like how
Right.
you, yeah.
So in the very early days, I was still paying back my student loan, which seems insane, and I had to pay it to Citibank in dollar. And I was like, how do I make this payment? And then I would try to send a wire from Barclays, Kenya. And, they'd call me in the middle of the night to verify. It was really difficult. So the first thing we were like, well, let's sell Bitcoin to Kenyans, and then they could sell the Bitcoin in the United States or in Canada or in Europe and make payments. And at that time, there were some really cool, fast crypto exchanges, which would let you pay directly into a bank. That like got taken away a few years later, but at the time it was really cool. So a lot of my friends in my community, international living in Kenya, were like, cool, I'll buy the Bitcoin and then I'll make a payment into my European bank account, or I'll pay into a Citibank account, or I could pay to Canada. So that was our first set of customers. Then a lot of Kenyans who we met through this iHub were like, well, we want to do it to invest, and we want to do it to pay Asia, and we want to do it because we like other coins and we're launching things. And we're like, okay, great. And then we got into that community. So started out with international payments. Then it went into, the crypto economy and how do we onboard people into other crypto. And, as we grew, I think we were one of the first people to Jeremy Allaire, when I grew into Nigeria, was helping me cash out payments to Harvard because we had a Nigerian paying for Harvard tuition for his daughter, like 30, 40K. And so Jeremy's like connecting to the banking system in Boston for us. We were sending crypto for that. So, it kind of evolved. But then what we really realized is that what I said in the beginning, it was how do we make payments between African countries? And we realized there wasn't a crypto exchange in Nigeria. And we were the crypto exchange in Kenya, and we were the crypto exchange in Nigeria. So did we actually need to send crypto back and forth, or could we just pool? And so then we started getting into pooling funds where we actually don't need to send crypto to ourselves. And then we were like, well, let's just start selling FX. And sometimes they want Nigerian naira against Kenyan shilling, and sometimes they want Bitcoin. And we're going to treat it as an equal. And then I started speaking globally that we don't want to create crypto companies. We want to create companies that can use crypto. And this is a big difference because a lot of people would start a company and say it's a crypto company, and then look for a use case. Here we had the use case, and we even included fiat because it was more helpful at the time for some of those flows. And to this day, as we grew, we trade all these currencies around the world. Over 150 currencies around the world. We're still crypto native, and we choose to use whatever currency our customer wants. And more importantly, our risk controls, our technology, our knowledge base across the company includes crypto. So we're just going through this transition process with dLocal, and often they say, where's your crypto team? And we say, we are the crypto team. Every compliance person at the company understands crypto. Every trader knows how to trade it. Every onboarder knows how to onboard it. And I think that's been a very interesting differentiator for our company, because when you're working in the field, and when you're working in emerging markets and you're an operator and you're building, it became very natural. It wasn't as if I woke up one day and said I want to work in the field of crypto. I said I want to solve the problem of how to do cross-border payments and how to trade local African currencies, and crypto is a means to an end. And it's hard when I see like Jack Zhang or somebody from Airwallex say, there's no use case. There are a lot of use cases.
Yeah, and just talk a little bit about because I mean, I know we covered this in the first episode, but I'm assuming people may not remember it if they listened to it back then, but also it was the first one, so maybe not that many people listen. But just walk through kind of like what the traditional payments providers at that time were charging and like the difficulties that people had using those, and then how, this was like so much different and kind of what your prices were versus,
Yeah.
yeah.
Well, we were right at the time when it was becoming part of the SDG development goals, the Sustainable Development Goals of the UN, to lower the overall cost of remittances. And at the time, the average cost of remittance in Africa was two times more than in Southeast Asia and South America. So it would be like 2 to 4 in those regions, and it would be more like 4 to 8, even above 10% in some African markets. And I could speak for 10 podcasts about why that is, and you can read a lot about the monopolies that some of the traditional remittance companies held, or the fact that a lot of the international wires would go through just 2 global banks, settlement banks, Deutsche and Standard Chartered at the time. There's a lot to talk about how the monetary policy and the banking infrastructure was created in sub-Saharan Africa to lead us to that point where there was a lot of high friction. And when we started, the Bloomberg article that was written about us month one said Western Union killer. And, that was a goal at the time. And Western Union lowered their price because of it. And we were like, wow, it was almost intoxicating how powerful we felt as a startup. Like, hey, people are nervous about anybody shining a light into this dark corner. And we're just a tiny peanut, but wow, it was empowering, maybe too much so, gave us a lot of hubris, like, yeah, we're gonna go change the world. But that was pretty exciting. And now, 13 years later, there are a lot of copycats of Bitpesa. And now AZA, we changed the name over time to reflect a more wider African brand instead of pesa, which is a East African word. And there's a lot of copycats, and great, welcome them in. I mean, when you look at the trading hubs of Hong Kong and Zurich and London and New York, there's a lot of asset managers, there's a lot of brokerages, there are a lot of prime brokers, a lot of trading floors. They're all needed, and we need that same level of development in all of the African capitals. We need multiple brokers, multiple providers that can only increase competition. Now, I'm speaking as someone passionate about the region. As a founder, I want market dominance. but I think as somebody passionate about the region, I want development.
And over time, like, how did you decide which African markets to expand to, and like, who were the customers you were noticing in the different regions?
Well, obviously at the time, the biggest buyer of African currency were remittance companies. It was like 34 billion that was coming into Africa, and remittances at the time, full remittance volume now in Africa, just Googling this quick so I get it right, I think it's over, 500 billion. So, I mean, it was really huge growth in the last 13 years. And at the time, that was still very juicy for us. So we were like, we want to get a piece of that remittance because they're the ones buying the African currency. And then had a lot of corporates selling the African currency. Originally, the first year we were doing retail, and then we realized we don't have the marketing budget to do retail. So let's go up. And when that first customer sent the payment to Harvard of $35,000, we're like, wow, that's way better than a $5 customer. So how do we move up and go wholesale? And so we started working with remittance companies. And our first real big win was a publicly traded remittance company out of the United States. I won't give their name. And they came in and they launched Nigeria with us. And unbeknownst to their board, the treasury team would pay us in Bitcoin. And we would settle in Nigerian naira. And like we were using Skype. And they were like, wow, your rates, your speed of settlement, this is amazing. And the product took off. Of course, they're never going to say that on a shareholder call. This was years and years ago, like 2015, 2016. And we were really just like, wow, this really works. And over time, our compliance got better. We got licensed in the UK, licensed in Spain. We bought companies with licenses. We expanded to Nigeria, which was the biggest remittance market at the time. We went to Ghana, which is another big remittance market. We looked at the markets where the remittance market was big and where it was easy to build into the banking infrastructure for settlement. And that's how we first started expanding. And then Nigeria had a crazy period where they were unfriendly to remittance and fintechs during a certain political period. And so we said, let's go into Francophone Africa that's not penetrated at all. And we were one of the very first fintechs to go into Francophone Africa. And we launched Senegal in 2016. and very early in the space. And now Senegal, Waimu region, the whole West African region, as well as Cameroon and Semak and the Central African region are some of the hottest areas to fintech. So again, now there's like, I had a call this morning. We're like, there's so many brokers, there's so much competition, which is a beautiful thing to see, right? And I think when we started, there was literally nobody. And we just, I think, had one or two remittance companies. Now we have 35 of the largest remittance companies, including Western Union and MoneyGram, who trade with us. And most of them don't trade crypto or stablecoin. Some of them do. I won't share who does and who doesn't. But a lot of our corporates on the other side buy stablecoin, and that's changed over the years.
So yeah, talk about that shift, like when you went from Bitcoin to, I'm assuming it was next stablecoins, like what was it,
Yeah,
USDT or yeah. When did you do that and why? And how did it change business for you?
the demand in the beginning was mainly Bitcoin and ETH. We didn't have a lot of demand for other smaller coins. A lot of customers would come to us to enter the space and then go on to other global exchanges and, do day trading, whatever they were doing. We were kind of like an entry point for them to just get out of their African currency and into crypto, or vice versa, sell their crypto and get a great rate. And, you need a lot of liquidity to make that um, feasible. And so we would stick to the main coins. Every now and then there would be like a year where another coin was popular and people would ask for it and we would sell it. But really we stuck to the ones that had the most liquidity. And then, I don't know, 4 or 5 years ago, people started asking for USDT. So we started selling it. And then 95% of our crypto volume went into stablecoin. And it was a bit of a surprise because we're like, why do you guys think this is more stable than other cryptocurrencies? And the jury's still out on that, but apparently people think it's better or safer. No judgment. I just, listen and I don't judge.
But when you say that, what are you talking about? Are you talking about like a reserved backed currency has the risk of the central provider, or are you talking about like things having to do with the US central bank?
Well, I just think that like it's a private coin, right? And just like for a long time it wasn't regulated. So, and yeah, I guess I would say that I was a firm believer in Bitcoin's safety and stability in the beginning. And so I was surprised that people thought a stablecoin also owned by a private blockchain was more stable, or 10 times more stable. And companies that would laugh us out of their office talking about one would be very excited to use the other overnight. I just didn't really understand that. But in any way, I think the marketing was a lot better and people really adapted to it better. So, no judgment. It's what the customers wanted. We started selling it, and now we see a lot of demand of that. And even now on the remittance side, which were the last people standing to welcome this technology, except for that one early adopter, we're now seeing a lot of people say, yeah, it's easy to trade with this on the weekend, on a Friday. It's Ramadan, and we have huge volumes. It's a holiday. And it's like Memorial Day or Labor Day and the dollar is closed. You forget that over a weekend when the US banking system is closed, companies need to take a credit risk, a 2-day risk or a 3-day risk. And if there's a holiday, even longer. And if you have a slow banking system like we do in some markets in Francophone West Africa, where it might take 24 to 48 hours to settle domestically, that adds another 2 days. Who's pre-funding that? That's a whole nother financial system problem. And so things that can settle 24/7, which is the way the world works. I mean, we say 7/7 in China, right? And, also in Africa, people work 7 days a week. So, I was on stage at Money 2020 a few years ago, and a very prominent CEO of a fintech said, only illegal activity happens on the weekend, Elizabeth. And I was like, yeah, I should just probably name him. But, no, markets are open, things trade, and we can't be bound by like 2 p.m. cutoff time.
I feel like I'm learning things about the world because I did not know that in Africa and China they work 7 days a week. I lived in Indonesia, and I remember in that country they worked 6 days a week, but I was not aware of these things.
Yeah, you can
Um,
settle. A Nigerian banking system settles 24/7.
oh, interesting. Okay, but I guess you're saying so in Nigeria they do that, but then like other parts of Africa maybe they're slower. So it's like even just within your intra-African business, you are dealing with like different kind of lengths of
Yeah.
settlement times?
I mean, the banks might not be open all day. I mean, they're definitely open on Saturdays, and a lot of people go to the office on Saturdays across Africa. I would say in East Africa for sure, they go to the office at least a half day on Saturday sometimes, many markets. But also, people do business meetings on Sunday. It's not like people are golfing all the time, on a Sunday, or yeah, people are working on the weekends, and remittances are for celebrations sometimes. And celebrations happen on the weekend, and holidays happen on the weekend. So people send a lot of remittance over the weekend. So, there's a lot of business happening on the weekends.
Okay. And then, so I'm sure that these numbers kind of shifted over time, but what kind of was like a more typical breakout for remittance versus like B2B? Like what, how many different types of payments were you doing?
So we balance out, right? 50% are buyers of African currency, 50% are sellers of African currency. So remittances have only ever been the buyers of African currency. There's very few remittance companies that are successfully sending money out of Africa. There's a couple of exceptions where they might be sending cross border or intra Africa, but generally we had 50% of our business were remittance companies and 50% of our business were corporates, including other fintechs, other crypto exchanges, banks, FMCG companies, that has evolved over time from being traditional corporates to now being a lot more fintechs and a lot more banks. And that's been interesting to see the evolution of over the last 13 years. But the inbound is still mainly remittance companies. And now we've added a couple of payment companies as well, that have come in. And I think when you see things like the Circle Payment Network, or, previously it was, other payment networks that wanted to channel remittances. A lot of them started, a lot of them got excited, but they weren't really able to onboard the companies. So the network might have been beautiful, but nobody was driving on that road. So something different about us is that we actually transact this remittance volume and we have these companies onboarded. And I think it's hard if you're going to build an intermediate network and say, hey, everybody, go on my network. Well, why would we? We were already working with those companies. So I think a big use case that people say about remittances, or, I'm going to launch this network, the Stellar network or something like this, and everybody's going to use it. Yeah, but then you have to go in one by one win each of those clients, onboard them, have good rates, have good service, have a good API, and insert yourself as an intermediary. So I think there are a couple companies around the world that have done what we've done. Bitso, for example, was working in parallel to us at the same time in LATAM, in almost like a parallel universe, and they've been very successful doing that. And there are a couple others around the world as well, who've been directly integrated into these companies.
And so, just back to the stablecoin thing, I did want to ask, like, you said people were requesting USDT. Were they requesting it on certain chains? Because obviously, USDT has moved from like, or it's just added additional chains. But is that something that you're just doing on the back end, based on like fees, or is that something where people themselves are requesting which type of USDT?
I don't have a smart answer for this. I think it's evolved over time. I think it's basically just very vanilla, like the basic ERC chains, like nothing. We haven't seen a lot of variety. I think most of it clusters around the same exchanges and the same way out. And so I don't think we see a lot of going down the list of innovation. We see, the same three wallets or the same three exchanges pretty much often. I think, people who are day trading or people who are investing in new technology tend to lose the fact that actually most of the volume clusters around the same thing. And I know a lot of people don't want to hear that, but that's actually the truth.
Okay. And so generally, like over this time, because now we're basically talking about like an over 12-year period from when you launched to now, like generally, how would you say crypto usage in Africa has changed?
Not a lot. I mean, yes, we've moved from Bitcoin and a little bit of ETH to now USDT or an ERC20 wallet, but like we don't see a lot of other wallets requested, and people seem to be fine with it. And I don't think people care as much over which wallet because they're transferring the value pretty quick.
Oh, okay. Okay. But I just mean like from But like, I just mean from being in Africa, like not necessarily your business, but like, are you noticing just
Oh
like,
yeah, yeah, of course. Like now you fly into Lagos airport and all you see are fintech and crypto signs everywhere. And they're like there was a big banner that's like crypto is legal. It's not legal in some ways, but like you see whole airport had a Binance advertisement on it when crypto was illegal in the place they didn't care. They just covered the airport in this gigantic sign. They even sponsored like American Idol Nigerian superstar was sponsored by Binance. I mean, that was a wild time because it was like everybody was coming into this space. And like a lot of crypto companies have come in and said, I'm the only regulated company or I'm the only one in this business. There's just a lot of claims and not a lot of knowledge and a lot of investment flows come in. So you see tons of startups now. There's this tech event we were at in April, the Africa Tech Summit, and it was hundreds of companies and half of them were involving crypto in some way. And that was before stablecoin summer. So that was like the precursor, kind of see the trends happening in Africa that later hit the rest of the world. And everybody was there. And it was just wild to see. And we were, 1 kilometer away from the coffee shop where we used to have our Bitcoin meetup. And it was just, I felt like a grandma. I'm like crying at my kid and my grandkids, nursery school graduation. I was like, this is beautiful to see this huge blossoming. And, my team was there and we were kind of like slowing down. We knew the deal was happening and we didn't want to tell anybody. Some people knew. And, they didn't have tickets to some event. And we go to like get in to this event for a crypto exchange and we're on the line and we're like, can you believe there's a line to get in? And someone's like, oh yeah, we know her. The crypto lady, let her in. I was like, I don't know whether to be proud or like offended. And then my team was like, yeah, we're going to this lame party, but it was just so funny because none of that was in Nairobi back in the day. And it's just gotten so big. And I think a lot of what I'm hearing from like Nigerian banks is like, how do I get into this? How do I offer that? So just a completely different planet that we're living on.
and was that era like when it kind of really exploded? Was that like the 2021 era or?
I would say after COVID for sure. It was just like
Oh, okay.
PC pre-COVID and after COVID. AC, big difference. I think during COVID, companies that were digitally savvy took the whole market. And we had one of our best years, and a lot of brick and mortar banks suffered, and a lot of wallets that were not telco based. So, not connected to SIM cards were the ones that were soaring. And so you had a lot of payment companies doing domestic payments like Flutterwaves, Chipper Cash, things like this, Wave wallet that came in that are not based on a SIM card. And that was the first time those big companies got huge investment. They scaled and they kind of showed the telcos that they could leapfrog, I'll use the word there, leapfrog those oligopolies, which is what they were, and it was exciting to see. And then, we never really did a $300 million raise or like a huge thing like that. I think those were reserved for retail payments, which is, a very different game. Takes a lot of money to run it, earns a lot of money, but spends a lot of money. We had a different business model and we really stayed in that B2B space. But I think that's when we saw a couple of those unicorns go. Now, some of those have gone bust, but at least it happened where they like did those moonshots and came in. And now I think you see a lot of regulators finally issuing some licensing. So South Africa, which is usually the first, came out last year, issued 50 exchanges licenses, which was great. Nigeria, after a lot of talk and 10 years of white papers, finally licensed 2 companies. Not the companies you think. If you actually check, it's like 2 companies nobody's heard the name of. So a lot of the companies that say they're legal in Nigeria don't actually have those licenses. And we're now seeing the VASP license in Central Africa. And so it's not open space. It is a regulated space. And I think that's great for the development of what's to come.
So in a moment, we'll talk a little bit more about Elizabeth's journey. But first, a quick word from the sponsors who make this show possible.
Hi, I'm Matt Hogan, CIO of crypto asset manager Bitwise. Look, crypto can be confusing. There's so much noise and the space changes so quickly. That's why, every week, I write a 5-minute memo on the biggest stories impacting crypto, in plain English. Why is Bitcoin up or down? What are people missing? Where should investors look next? Get the lowdown every week. Sign up to get the weekly CIO memo delivered straight to your inbox. Go to bitwiseinvestments.com/CIO memo. That's bitwiseinvestments.com/CIO memo.
Carefully consider the extreme risks associated with crypto before investing.
Selling your Bitcoin just to get cash? One early Bitcoiner did and missed out on over $1 billion. With Xapo Bank, you can access up to $1 million instantly without selling a single sat. Eligible Xapo Bank members can borrow up to 40% of their Bitcoin's value. No stress, no selling, no buying back in. Use it for what matters most. Your dream home, your child's education, a getaway, or that can't-miss investment. With Bitcoin-backed loans, you're in control. Set your installments and repay in Bitcoin or US dollars, your choice. Enjoy competitive rates, zero fees, flexible terms, and no penalties for early repayment. And your Bitcoin stays safe, never rehypothecated, relent, or pooled. It's securely held until your loan is repaid. Check them out at zapobank.com/unchained. Is your money really yours? In many countries, governments freeze accounts, surveil transactions, and seize assets. Not just from activists, but from everyday people like you and me. That's why the Financial Freedom Report exists. This weekly newsletter from the Human Rights Foundation exposes how authoritarian regimes use money as a weapon and how you can fight back. Every Thursday, uncover the latest on financial censorship, asset confiscation, runaway inflation, and the rise of state-controlled money, plus real solutions like Bitcoin. I personally subscribe to the Financial Freedom Report, and it is one of the most high-signal emails I get each week. Subscribe now for free at financialfreedomreport.org. Here's another listener comment responding to my recent interview with Jesse Pollack. On X, He Is Joey wrote, between Coinbase's seamless on-chain integration and the fact that Base is still secured by Ethereum, it gives institutions like JPM the scalability and compliance rails they need without jumping into Wild West territory. To have your comment featured on a future episode of Unchained, please write a review or leave a comment on YouTube, Farcaster, or X. Back to my conversation with Elizabeth. You quickly mentioned that you acquired 2 companies along the way. It seemed like you were implying you did that to obtain licenses. Can you talk a little bit about how you decided which companies to acquire and how that helped your business?
Yeah, first one was when Brexit was happening, and we were worried that we'd be kicked out of the UK, and we had a UK license. And so we started to explore buying one of our clients, and that was Transfer Zero. And they had a license for the Bank of Spain and an incredible founder whose dad had also been in the remittance space with a lot of contacts. And we ended up acquiring them in 2016, Transfer Zero. That was awesome. And now we have a Spain office and a base there. And that's been really a beautiful story, and it went very well. And then during COVID and the Nigerian kind of crisis we talked about, when 90% of our volume is Nigerian and then it got shut down, we quickly needed to diversify. And one of the ways we diversified was into Francophone Africa, and the other was buying a company in South Africa. And again, it was one of our clients. It was pretty organic. We got a great price. The team was incredible. We absorbed their whole team of 50, and we became one of the largest providers of remittance processing into South Africa. So again, focusing on that remittance space. And we were trading a little crypto in the early days in South Africa. It was regulated. It was not regulated. They said they didn't want remittance companies doing it. They did. There was a loophole. So we've been very careful and cautious. I would say we haven't pushed the button in South Africa at all. And been more watching what happens in that space. It's been a very hot crypto market. We were participating in the beginning, but I think when the South African Reserve Bank got clear, we decided to not do anything that was in the gray area there.
And then I know that this was more like just a mess that shouldn't have happened if there had been more organization. But AZA was a payments provider for FTX in Africa, and the bankruptcy kind of made a mistake about like the relationship. But just explain that story.
Yeah. I'm already like, my biography has too many chapters in it. This chapter was an unnecessary one. Just so wild. Yeah, we announced a partnership with FTX. The internet doesn't forget. There's some branding material on there of FTX Africa. We had big hopes that these guys would bankroll regulatory advancement. They were, lobbying a lot of banks. They were working very, sent their regulatory team to 4, 5, 6 countries, talking about derivatives for crypto. I mean, that was very attractive to us because it's expensive to get licenses in all these countries. This is not like a North American exchange where you get licensed in Canada and the United States. Okay, yes, you have to go state by state, but we had to go to like Francophone, Anglophone, South America, South Africa. It was a lot of work for a small startup. So to see FTX come into the space with this like regulatory lobbying and petitioning central banks and security and exchange commissions for derivative licensing, we were like, yeah, we'll help you. So we signed a partnership and we launched them in a few markets. Obviously, when that exploded, it blew up in everybody's face. We had a lot of cleanup work on their behalf to do and a lot of trust building to talk to regulators, clients, partners, understand what that looked like. We had to restructure. It was a gigantic mess and, really heartbreaking because we had been pushing the envelope to show that African companies can be compliant, that, we can be on the right side of the law. We were working so hard to lobby regulators and work with them not to go into the gray area, not to launch without clarity. And then when that happens, it just pulls the rug out on anybody involved and makes everybody look as, you know, distrustful as the worst person. And so that was really hard and removed a lot of trust. And we really struggled coming out of that. And we worked really hard to regain trust. And a lot of our clients came back and a lot of our partners came back, but it was a very different environment. It was, a lot of the banks had closed, Silvergate had closed, Reserve Trust had closed, Silicon Valley Bank. It was just like explosion after explosion. And funding dried up, and it was a really tough time. And if we were a newer company, we might not have survived. But given that we had survived so much, we got out of there and made it all the way to this great exit that we're doing now.
Yeah. So talk about that. How did this deal come about? And also just even tell us who dLocal is.
dLocal is a success story in their own region and their own sphere. They started in Uruguay, which, for those of you that know, is a little country in the middle of South America, and had a lot of innovation. And they started as a buyer of local currency. I'll use an FX term there, where they were buying local currencies and selling hard currency to processors. So the Netflixes of the world, the Alibabas of the world, a lot of merchants who wanted to sell their local currency that they collected from customers and then buy dollar or euro, et cetera. And so they got really good at this product. They grew very fast across Brazil, Mexico, Argentina, a couple of core markets, and through the moon. They listed on NASDAQ, which was really impressive, one of the first unicorn success stories in the space in the region. And really hit it out of the ballpark. And they've been trying, like a few other global companies in the global south from Asia and South America, to try to enter Africa. We've had a lot of, global companies say they want to go into Africa, but then they're like, Africa's always 2 years away, which is what they say every year. And so we didn't really see those North American, European companies enter Africa like they said they would, except for Stripe with their acquisition of Paystack. But they knew Paystack back when they were at YC, but still, let's give a clap to Stripe for that. But a lot of those companies never really put their money where their mouth was. And then you started to see some Asian companies invest heavily, and a couple of LATAM companies invest heavily, and dLocal was one of them. And we partnered with them for a while as a client and a service provider. And then we've been strengthening that partnership over time, and it's been better and better. And this new investment and plan to acquire the company pending regulatory approval is just really exciting, because it shows maybe we don't need to go north of the equator. Maybe the south power is enough. And that's something that strums the perfect chord in my heart, which is that the global south is very powerful. It is compliant. You can do business here. You can trade across borders. And a lot of the innovation isn't leapfrogging because there's nothing. It's building on existing innovation, and it's building on existing energy.
And so what will your role be going forward? Will it be basically the same, or how does this change things?
Well, right now, no change. Obviously, we're pending regulatory approval, and we are keeping our product live, and all our clients are live, and we're growing our product. Now we have a lot of synergies with the dLocal team in terms of partnerships, in terms of trading with each other. They're one of our biggest trading partners, which is exciting. In terms of investment, which is very welcome after the fintech desert that we've all experienced. So it's nice to be capitalized. It's nice to have a big trading partner and a lot of their know-how in the collections and merchant processing, which is very complementary to us because we do it on the other side. We work with a lot of buyers of South currencies, like the remittance and payment companies, and they work with a lot of sellers, like the merchant companies. So it's kind of a perfect marriage.
Okay, so now let's just talk more generally about crypto in Asia and this whole convergence of like the stable coins and crypto and fintech and just all of this. It feels to me like in the US, we're entering this era where they're all kind of now going to be competing in the same territory, all coming at it from different angles. And it sort of feels like maybe this moment already happened in Africa. And so you've kind of witnessed it. So I'd be curious to hear you just talk about how you see each of those kind of different types of players in terms of what were the different advantages they had, or like how did they end up competing? Do you feel that I'm going to make this up, but maybe like fintechs have more banking partners and like that gives them some advantage in this or that way, or maybe it's just that if you come into this like pure crypto, then you're more familiar with the technology, or just like how are you seeing that competitive landscape playing out and affecting the different types of industry players?
Well, number one, I don't see a difference anymore into companies that understand crypto and don't. I see every single fintech having crypto knowledge, the new ones at least. I don't I haven't come across a new fintech that's like, we don't do that, we don't touch that. No, obviously a lot of legacy companies. And it's similar to a lot of companies that are being founded that would be like, I don't work with AI. Like, yes, they are, in some way or function. And just by, necessity, a lot of their younger employees are using it and use it all through university, right? And so much more familiar with it. We're not seeing any new growth that's not at that level. Now, we definitely still see a lot of legacy companies, like again, to mention Airwell, he just came out and said, I'm not going to use it. I'm not interested in it for this purpose. But I think the new crop is coming in wiser and wiser in terms of that. And I think banks now, especially with the new legislation in the United States, are much more open to working with companies that have this. First of all, because everybody's using it now. It's not like we're the minority. It's not like Elizabeth's on the outside with Bitpesa and 99% of other fintechs aren't talking about it. I mean, I used to go to conferences and be the only person on stage or, the only person at the conference using it. And, people would be walking around with their finger pointed at us. And it was like, really felt like the outsider. Now everybody's using it. It's not, different at all. I went to Money 2020 and everywhere you looked. So I think that means banks have to accept it. And that also means investors can't say, I don't invest in crypto. Yeah, you invest in it because everybody has some sort of component. That's the biggest change. I think we're seeing a lot of influence from Asia. A lot of the goods imported into Africa are from Asia, right? The pharmaceuticals, the retail goods. You go into any supermarket, any electronics store. One of the biggest phone device importers is a client of ours, and the amount of accessories that they're importing from China is wild. And so it's really them that are leading the demand for technology. If the exporter from China says, this is how I want to be paid on a QR code or via this app, that's where we start seeing our customers demand. They need to help making those payments. So it's coming also from those with market power, which is the seller. And, I think that's exciting and interesting and very different story than what some people want to hear.
So in a way, like it sounds like so your starting point was more like crypto mobile money, but you kind of moved to become more like crypto fintech. And then these fintech companies came and they started fintech, and now they've become fintech crypto. So you're all just like coming into the same competitive area from different starting points.
Well, let's remember, mobile money was fintech, right? That was the fintech at the time. because they were the weirdos at the conference in the beginning, because people were saying, I have an MIS software system. That's what they called it. Like a, and why we don't want to use this mobile money wallet. And, Senegal didn't even have a mobile money legislation when we moved there in 2015. And then they came out with it. So mobile money was just a version of fintech that was tied to the USSD or the SIM card. Then we had fintech go into web-based, online, or they were coming with the Chinese handsets, on the device, on the hardware, or they were accessed online. Now we're seeing it go into the metaverse or wherever you want to go from there. And I think it's the same fintech. We're still lending, sending, saving, right? Spending. Those are still doing the same 3 or 4 financial activities. It's just, how do we access them, and how is a service provider giving it to us? Over the phone line, over the internet, over the blockchain, over the metaverse, whatever you want to say, but it's really the same couple of products. And what does that look like? And I think the barrier to entry just gets lower and lower when we don't have, infrastructure that's co-opted by the government, like a government telco, or even the internet service providers. And, the barrier of entry gets lower and lower, which means more and more competition and more entrants in the space. And instead of there being one mobile money provider in 10 countries, then there's, lots of companies doing mobile apps, and now even more on the blockchain and even more in the metaverse. I think it's like pretty exciting to see how that's opening up.
And do you feel like in this area where now everybody's kind of, like having either similar offerings or the way that they're doing things on the back end are similar, what ends up being the main areas on which you compete? Is it literally all just driven by price, or but also maybe like efficiency? Like, what are kind of the things that make or break the winners and losers in this space?
Well, everybody has to still touch the local currency at some component, because we're not in a place in time where people are paying rent in crypto, right? You might be paying it via crypto to local currency or via mobile money to local currency, but it's still a local currency economy today. Let's date this June 2025, because maybe in a few years it won't be, but right now it is. And when you're trading currencies, she with the most liquidity wins. So the competition is who can get the most liquidity on their platform. The most companies trading, the most in and out, so that trades are not chunky, there's less slippage, and you're able to give sharper pricing. That's how it works, right? And so you see a lot of entrants, but they don't actually get the clients. And then you ask, how do the clients get on? Well, unfortunately, some of these clients are regulated and they take a long time to onboard. So the person with the most onboarded clients wins. And, some of these clients are pretty clunky and they have to connect into your API, and it could take them, 4 or 5 sprints, even longer. So then the person who has the best engineering team to integrate these guys. And then, maybe the banks will open their arms to fintechs. But if you have a compliance issue, they'll close their arms to you. So now the company with the best compliance wins. So, wait a second, those are all the same things that make any company good. Good client compliance, good sales, good onboarding, good efficiency. So it doesn't really matter about the technology if it's sort of converging and everybody's using it. It still matters on those core company basics. And I say this a lot, and people are like, oh, Elizabeth's a hater. She's hating on this company that's growing so fast and breaking things. And I'm like, in the end, there is infrastructure in Africa. There are people here. There are rules. It's not a place to come and be like, we can do whatever we want and break every rule. No, because you still need to access the local currency. And that travels via banks, and that's regulated by the government. And until we come to a place where people are using crypto for everything, which might be your goal, but until we get there, you're going to have to participate in the economy. And that requires, core company basics and governance.
And so, just like, at this moment in time, so in a way, actually, just to make this one point before I ask my next question, it seems like the acquisition with dLocal will increase the liquidity. And that's kind of like what the big strategic move is there. So when you're looking, at how it is that people are or businesses in these countries are using stablecoins or want to use stablecoins. How are you finding that they're, opting for that versus like mobile money, versus like crypto, versus even their fiat currency or, whatever? Like, what role are all these play? Yeah.
This is a great question, and I said this a lot over the years, is that mobile money works so well in a few countries. So there are some countries where mobile money penetration is over 95% of the economy sometimes, depending on the month and the season. And in those markets, it's hard to push for crypto for domestic payments, for P2P payments, right? Most people will choose mobile money. It works. It's penetrated. It's hard to compete. There's discounts. There's a lot of reasons about that. But country to country, cross border, still a big use case for crypto or internet wallets that happen to have expanded into multiple countries. You might have a great internet wallet, like in Nigeria by a Nigerian fintech. But unless that company has successfully also opened that wallet in Kenya, then you can't send it from Nigeria to Kenya. And unless they've successfully integrated with a wallet in China, it's still just a domestic wallet. So again, people forget that you have to create those companies, pay those taxes, set things up in multiple markets to be able to send from one to another. That's why people like crypto, because you can send it everywhere without doing all that heavy infrastructure. But if you need to re-enter into the fiat space, those on and off ramps, those pesky on and off ramps have to be built. So we see a lot of mobile money in the countries where people want to do small value P2P payments, and it's a mobile money country like Ghana, Tanzania, Kenya. Some markets like Nigeria and South Africa never really had that big mobile money uptake, but those banking systems are awesome. You can settle 7 days a week on the Nigerian NIBS, the national bank switch, and South Africa has great settlement as well. So, in those places, it's more bank transfers for local payments. And then, when it goes intra-Africa, that's tough. There's a lot of friction intra-Africa. So some of it's going via Swift bank, but a lot of it's going through alternative providers now, through fintechs. And some of them using crypto, some of them using pooling like we are, some of them using broker models. But I don't know what the statistics are. It's hard to know. There's a big informal economy, but I think we've become very competitive in that space.
As we're seeing this sort of like stablecoin mania in the US, I'm wondering, here we have Circle has just gone public, and I think the last number I saw was it was trading at about $240, which is obviously well above the initial price. And we're about to probably have stablecoin legislation here in the US. And I was just wondering, kind of like from your experience, what thoughts you have about what you're seeing in the US, like, where you think the competition here is going, or how, this kind of like increase that we're seeing in stablecoin activity will play out.
Well, the trading partners of a lot of my clients are in Asia, not the US. So they want stablecoins that they can settle in Asia.
But in US dollars, or what currency, or
Yeah,
do they
yeah.
want those?
Right now
Okay.
it's USDT. No, a lot of it's USDT. Now, will that change? Maybe, I don't know, but that's just a fact. They're mainly importing from Asia, not the US. Now, the banking system to do any payments outside of Asia, like if you're going to do a dollar payment into Europe, or you are going to pay the US, relies on American banks. And those banks like USDC more than like USDT. So it's almost the world is split, right? Who uses what where? And we're in the middle in that I think we operate on one of the continents that trades the most with Asia right now. And it's growing. So, I don't think we can ever see 100% using a stablecoin that's preferred in the US, but not Asia. So, you know, again, we just don't see that US 100% down. Now, it's very important. We still use a lot of US banks. I still have a good chunk of clients that want to make payments to US banks and Europe, but not all.
So basically, it looks like USDT will be used for like payments that are not either going to or routed through the US, and USDC. Okay. Yeah, that's kind of how most people are viewing it. There has been some speculation that China's digital yuan could be something that the country pushes, and that their leverage point would simply be how much business they're doing in a place like Africa. Like they could say, if you want to deal with us, you have to pay us in this digital yuan. Like, is there any, are you seeing any type of that activity or no?
Well, I'll just give some anecdotal answers because I don't have statistics. But, when I moved to Nigeria in 2015 for half a year, I would go to the marketplace and most of the people would have a Chinese handset with a Chinese native app and they would be speaking in Chinese text to their suppliers. I mean, a lot of these traders speak 4, 5, 6 languages already. So, it was they were, and a lot of them were going back and forth to Guangzhou. There was like, what do they call it, Chocolate City or whatever they call it in Guangzhou. There are like tons of Nigerians going back and forth. And I've met a lot of kids who have gone to school in China from West Africa and a lot of people who applied for the company who studied abroad in China. And, yeah, if that's your biggest trading partner, you're going to speak the language, use their apps, and use their preferential source of payment. That makes a lot of sense. That's not reinventing the rules of the world. That's exactly how everything works everywhere else. So, we've already seen a ton of that. And, when I lived in Senegal, I knew a lot of Senegalese who had studied abroad in China and come back. And I think that strength is a lot of governmental cooperation. I mean, for goodness sakes, like there was a Zambian bond held by China. That was like one of the first sovereign local currency bonds held by a major government, and it was in China. So I think and they did a big currency swap with the kwacha. I think that's going to continue. And I've already seen it back when it was like a Palm Pay wallet, which was, coming with the Palm device, the handheld. Everybody moved to that. And so I think that will continue for sure.
But are you seeing that the Chinese government is trying to use their, business interests in Africa to push the digital yuan, or?
I mean, I can't really comment on that. All I know, we haven't had any major clients request it right now.
Okay. Well, I guess the last thing would just be, this is one of those questions that I, as a woman in crypto, don't always love to ask other women in crypto. You can probably predict what that question is. But
are you going to ask me about work-life balance?
No. Thankfully, it's a better question than that.
I was like, Laura,
how do you parent and also have a job? No, it's not that. It's not that. But I was just wondering, like, you mentioned at the beginning that at that time you were probably the first crypto exchange that was founded by female founders. And, generally, I just wondered, like, what you thought of your journey, because it is probably different from that of most of your male peers, whether it comes, we could go on, to discuss so many metrics within that, but like, just go ahead and say what's top of mind for you.
Look, it's not only that I was female, I was like a 30 something mother female. So I wasn't like hot girl in a bikini founder. I was like middle-aged lady founder, right? Which itself is another thing. Like, and when I would go to a lot of these crypto things, I remember the first one was the first Satoshi Roundtable. And they were like, we're going to the foam party. And like everybody had like 3 girls on their arm. And I'm there like, oh, okay, guys. Like I'm going to call the babysitter and then, trade some Naira for my bedroom and then come back and see if you guys want to talk about investment. I think it was just not only being a female, but like just being in a certain space. And then I would try to do that and be like, yeah, I'm cool. I can hang and let's go out. And it's just like hard to understand where the heck you are. And, as a woman in general in finance, if you want to be cool and hang, you have to, maybe tolerate things you wouldn't tolerate with women, people of your own gender. And if you, want to be cool and hang, sometimes you have to sexualize yourself or allow yourself to be sexualized and like, be like, let's go to a club. I wouldn't go to a club with a regulator, but like that's, if it's a young and tech space, like they're having this meeting at the club, so you have to be like, okay, I guess I'll put on a dress. Or like a lot of things were at the beach or at swimming pools. And you're like, I guess we're getting in the swimming pool. And I'll never forget at one event, there was like a woman from the European Parliament. And she's like, I'm wearing my pantsuit. Everybody else is in bathing suits. And I remember being like, this woman rocks. She's just like, no, I would not wear a bathing suit to the European Parliament. Why would I wear one to an investor panel? But I was like, I don't know if that's tech or that's crypto or that's American venture. And I didn't know what I was doing. I was all over the place. Sometimes I draw a line, sometimes I wouldn't, sometimes I participate, sometimes I wouldn't. I think it was just weird and hard, and we did the best we could. But I definitely so many times felt like I was not in the boys club. Sometimes it was like, "Oh, we really want to help you. We want to help Africa. We love Africa. We're doing this investment, not because of you or your numbers, your product, because we love the space." I mean, that was helpful at times, but I think when it came down to it, we were an infrastructure company, and maybe it wasn't the right model for venture because we had to build so many on and off ramps, so many licenses. Took 13 years. That's not a venture model where they want like 3-4 years and then go forward. So I think because there was so little investment in that space and so little people in that space, I joined in that crowd. But actually, what we've been building is something a lot different. And that's been hard too. And I think just so many lessons learned about what it looks like. Now, I surrounded myself with an almost all female team for a while, and then we let the guys in, and we have 55% female men, and a lot of allies, and we won a lot of awards for our team culture. So I think I had a safe haven to go back to in my team and my culture, and that's been really helping us through.
All right. Well, Elizabeth, is there anything that I didn't ask you that you would want people to know?
I think what I'd love to say is just, investment in Africa in general, I think has been one of the hardest parts about this journey. I think it's been really, I would always say that I'm so grateful for the early crypto community and being open to Africa in a way that traditional tech investment in the space was not. And I think because crypto was meant to be global and inclusive, it was just a really beautiful thing to have so many investors be open to that. And we were the first African investment in a lot of these portfolios. And I'm really proud of that. And we had a lot of education to do, and we brought a lot of investors to the space. And I don't think a lot of investors realize how early it was. And so now after fintech, bubble and all this stuff, people are like, "Oh, we tried Africa, let's go elsewhere." And I'm like, don't give up on the region and keep coming back. It was very early days when you invested, we didn't have that 20, 30-year history that you had in Silicon Valley or elsewhere. And I think Africa needs more time, and most people on planet Earth will be African at the turn of the century. This is the time to keep learning more, to keep digging deep, not to believe the first person with a pitch deck that tells you they'll expand to 50 countries in 1 year, but to really understand what needs to happen to capture the growth of this continent.
All right. Well, it's been so great having you on Unchained. Where can people learn more about you and AZA Finance?
Well, we're on LinkedIn, we're on X, we're on our website. Just reach out. Happy to chat.
Perfect. Well, thank you so much for coming on Unchained.
Thanks for having me back.
Now we have the brief bonus interview with an exclusive announcement from Ledger. I'm here now with Charles Guillemet, Chief Technology Officer at Ledger, which has a new self-custody product that they're announcing the day this episode airs, and it's called Ledger Recovery Key. Charles, tell us what problem you were trying to solve with this new product.
Hi, thank you for having me. Yes, the problem we want to solve with this product is the problem of the backup. Like backup and recovery is comes always with some friction, and this is part of self-custody. Self-custody is about having your own keys and being able to prove ownership over your coin. But it works only if you're secure and only if you have a good backup option. So at Ledger, we are trying to innovate in the space, and this is what we did in the past with Ledger Recover, and now we are launching Ledger Recovery Key, which is another option to do the backup and the recovery for your coin.
And so tell us how it works.
Yeah, definitely. So it looks like this. It's a small square, and it's an NFC card chip that is inside this device. And when you are doing your onboarding with your Flex or your Stacks, it works on NFC, so it only works with the recent product. When you do the onboarding of your device, you are going to create a pin for the ledger recovery key. You input the pin on this device, then you tap the card on the device, and that's it. You have created a backup for your 24 words. And as soon as you need to recover your wallet because, I don't know, you wiped your device or you lost it or whatever, you need to recover your wallet, then you just have to get this device with a brand like this one is wiped, and you will recover your wallet not by inputting your 24 words, but by inputting the pin of this card, tap it on the device, and then you recover your wallet. And that's it. It's very simple, completely secure, and it provides like a new option for creating the backup of your 24 words.
Okay. Yeah. Obviously, people have had issues before where they've lost their seed phrase and things like that. Famously, well, there's so many famous stories. Like, I think the CTO of Ripple or former CTO was known to have lost a seed phrase or a password. And then there's somebody who, well, I guess it's a little bit of a different story where they drop their hardware in the trash and then,
I
but
think he
that's, it's,
lost the password of his Iron key. I know this story a little bit. Yeah,
oh,
there's an
okay.
Iron key. Iron key is an encrypted USB drive, and you simply lost the password of it.
Oh, okay. Okay. Yeah. Well, so still there is an element of risk in the sense that now there's this other thing where somebody else could potentially, if they get control of both, they could use that to drain your wallet. So how would you recommend people safeguard this recovery key?
So first of all, it's yet another option. Like there is no perfect setup. Your setup really depends on your threat model and everything. So I won't give like an absolute recommendation. It really depends on how you see your setup. But a potential possibility is to do like you write down your 24 words on a piece of paper. You put this at the bank in a safe, for instance. And at home, you also have this ledger recovery key that you protect with the pin. The pin is a regular pin, meaning that you input 3 wrong pins, and this card is wiped. And so that at home, if you want to recover quickly your wallet, then you can simply tap this ledger recovery key with this device after inputting your pin, and that's it. You recovered your device. So for this one, you like compared to the recovery sheet, the problem with the recovery sheet is if someone get an access to it, it has a direct access to your wallet, and there is nothing you can do. With this, as there is a pin, then it's protected by the pin, and you don't really have to worry about someone stealing it.
Okay. And so just explain the tapping that I think uses NFC technology. So can you explain, what's happening on the back end?
Yeah, definitely. So, in terms of communication channel, definitely we are using NFC technology. So the same tap and card that you have with your banking card when you do like a wireless payment, or the one that you have on your phone. On top of the NFC communication layer, we have implemented our own secure communication channel, and what we are doing is a mutual authentication, meaning that this card is proving it's a ledger one, and this device is proving to the card that it's a ledger one. On top of this, there was another number on this card, so that exactly as you do when you do like a Bluetooth pairing, you have to verify the number, and there is the same thing here, so that you are sure that you are discussing with this specific card and there is no other card in the room or something crazy like this. And then as soon as like the authentication is done on both sides, everything is encrypted. Like we are mounting what is called a secure channel, and this secure channel encrypts every single communication that goes from this device to the card, and vice versa when you do a recover. So you have like a strong security guarantees, even if there was someone in the room with like advanced equipment that could listen what's going on the NFC channel. There was nothing interesting for anyone because everything is authenticated and encrypted. So there is a high level of security. And the second thing we can say is like inside this NFC card, there is a secure element chip. So we are using the same technology that we have in this device with the secure element technology, which is smart card technology, the one that you find in your banking cards or in your passport. So again, the highest level of security that you can have in the space.
So I know that it works only on certain ledger products, but not others. So can you tell listeners which ones will have this capability?
Yeah, sure. So as we said, it's an NFC type of card. So it only works with our recent devices that are implementing NFC, and we have the Ledger Flex and the Ledger Stacks that are implementing the NFC. So this one and the other one is the one with the curved screen.
Okay. So yeah, I think the older nanos are the ones that don't have this functionality. So this is like it's just one of those questions that's going to pull together a couple of different trends, and I'm not sure, how this could connect it with the recent launch. But obviously, there has been a very concerning trend about these increasing physical attacks on people who are prominent or even maybe not so prominent in crypto. But I wondered, and obviously Ledger is very probably much more information about how what happens on the back end, obviously because of what happened with your executive this past winter. But I wondered, are there any thoughts around how the NFC card could help protect users who self-custody in any way from these so-called wrench attacks?
Like the wrench attack is always a big problem. So here we are solving really the backup problem. It can avoid like the issue when someone would steal your 24 words on a piece of paper. Also, we are implementing like different functionality, which implements like the passphrase function, for instance. And this one is pretty good for plausible deniability. So for those who are not familiar with this one, so you have the 24 words, and on top of those 24 words, you can add a small passphrase. You decide whatever word or passphrase you want. And on Ledger, we are implementing this with different PIN. So you can have one PIN to access to your first wallet, the 24 words based wallet, and another PIN to access to your hidden wallet, which will be the 24 words plus passphrase wallet. So with this feature, you can implement plausible deniability, meaning that if there is someone with a wrench that is implementing a wrench attack, you can unlock the wallet you want and completely hide the other one. So this is a possibility. Also, you can use this ledger recovery key in a different manner. I also like this specific feature. So as you can have like multiple ledger recovery key, that means that you can put like a different seed in a different recovery key with the same device. So what you can do, and as it's very easy to back up and recover, you can switch from one seed to another very quickly. So in terms of plausible deniability, you can also do that, like use like two different recovery key, one with a smaller amount and another one with a bigger amount, like your wealth wallet, and all the time you are using maybe like the smaller one, and whenever you want to really use like your wealth one, you can use your recovery key to tap it and recover it on the device, and then you have like one device but two different recovery key, and you can switch from one seed to another very quickly. So it can also help in this area.
Okay, great. Well, thank you so much for sharing your news on Unchained.
Yeah, thank you for having me.
Thanks so much for joining us today. To learn more about Elizabeth and AZA Finance, check out the show notes for this episode. Unchained is produced by me, Laura Shin, with help from Matt Pilchard, Ron Iranovich, Pam Majumdar, and Mark Akuria. Thanks for listening.